Welcome back. You're tuned into Market Fadafat, where we're getting you all the buzzes in trade. And now on the technicals, we're joined by Nilesh Jain, who's the head derivatives and technical research, Centrum Broking. And from our research team, we are joined back by Rabinder and Kanishka. Hi, thank you so much for joining us, Nilesh. Let's talk about your first stock that you picked for us. That's TechM. On the charts, it's doing well today as well. In fact, in the last 5 odd days, last 1 week, this counter has moved 5 odd %. Tell us what you see in the charts for this one. A revival of sorts coming in for Nifty IT, it seems.
Very good afternoon to you. Absolutely. So first of all, if you see Nifty IT index as a whole, we have seen a good breakout coming in. It has crossed its 100-day moving average. It is already trading well above its 21 and 50-day moving average. So given the kind of setup that we are witnessing in Nifty IT pack, where we have seen a good breakout coming in after a long consolidation of 3 to 4 months now. So from here, we are expecting a follow-up move in the Nifty IT index. So we are very much bullish for another 4 to 5% kind of rally in the Nifty IT pack as a whole. So within this IT space, Tech Mahindra is our preferred bet. This particular counter has given a good breakout yesterday. Today we are witnessing a good follow-up move. So the structure is looking positive, and we are expecting a follow-up move to continue on the upside towards the levels of 1660 to 1680. So can be bought at present, can be added on decline, keeping a stop loss below 1580. So Tech Mahindra is a buy.
Mahindra is a buy from the IT sector. We could see levels of 1670 to 1680. That's the word coming in from Nilesh. But let's also put the spotlight on Aditya Birla Capital. The stock has been focused on the back of a block deal that took place today morning. Nearly 1.8% equity changed hands in 3 block deals. Remember, we had reported yesterday that Advent is looking to sell its 1.3% stake in the company. Jomai Investments, which is a special purpose vehicle of Advent International Corporation, had initiated a block deal yesterday to sell about 1.3 to 1.4% stake in the company. So in the block deal, which took place today morning, 1.8% equity changed hands, and Advent is the most likely seller in this block deal. The stock is in focus today on the back of that.
All right, AB Capital in focus on the back of that. But the next counter that is declining in trade is BSE. That has taken a sharp knock of almost 4%. In fact, now it's down 5% after the stock was placed under the additional surveillance measure ASM framework by the exchange, triggering investor caution. Now, the ASM framework is a regulatory tool used by stock exchanges to monitor and control excessive volatility or abnormal price movements. Now, the stocks added to the ASM list are subjected to enhanced scrutiny and trading restrictions such as a higher margin requirement or limits on intraday trading to safeguard the investors and maintain market integrity. On the back of this new ASM framework that BSE has been placed under, that stock is declining in trade with cuts of 5%.
The stock is sitting with a cut of nearly 5% on the back of that, but shifting focus to a whole host of pharma counters then. Glenmark Pharma and Laurus Labs. Nilesh, tell us, what do you spot in the chart for this counter?
Similar to Nifty IT, we have also seen a good breakout in Nifty Pharma pack. So defensive are once again back into action. The focus is shifting towards defensive space. So within this, Nifty Pharma index is looking strong on the chart given the kind of a breakout that we have seen today. We are expecting a follow-up move towards 22,300 to 22,500 in the Nifty Pharma pack. So within this, the preferred bet would be Glenmark Pharma. This particular counter has also witnessed a lot of good momentum recently, and good rounding bottom kind of pattern can be seen on the daily time frame chart. So structure-wise, it looks like it is heading towards 1700 plus with a stop loss below 1580. Glenmark is a buy. Another pharma pack, that is Laurus Labs. This particular stock, in fact, is one of the outperformers in the recent time, and the structure looks very strong, trading in a very strong uptrend in a rising channel as well. So we are expecting a follow-up move to continue towards the levels of 700 plus. So these are the positional targets, and one can keep a stop loss below 655. So apart from Glenmark, Laurus, we are also bullish on Cipla as well. So across all pharma packs, in fact, majority of the pharma stocks are witnessing good momentum. So we are quite bullish on Nifty Pharma pack as well.
All right, moving on then. Coming to you, Rabinder, you picked up GICRE. Tell us what's the news flow here?
Well, as Nuvama has come out with a note on general insurance, insurance where they say that the industry GDPI growth was moderated to 6.5% year-on-year basis in May 25, and the private multi-liners insurance GDPI is increased at a muted growth of 3.8% on a year-on-year basis, and public multi-liners has outperformed private players, logging a 9% growth year-on-year basis, and Bajaj Allianz General Insurance GDPI was up by 21% year-on-year basis, while ICICI General Insurance posted a moderate GDPI growth at 2.4%. And if we talk about Star Health, then Star Health premium grew by 3.3% year-on-year basis. Nuvama has maintained the buy rating on ICICI Lombard with target price of rupees 2,100. On Star Health, they have maintained the buy rating with target price of rupees 450, and on Bajaj Finserv, they have maintained the hold rating with target price of rupees 2,100. But ICICI Lombard is down 2%, while Star Health is up 0.3%, and Bajaj Finserv is up 0.2%.
Insurance sector in focus on the back of this brokerage report, but shifting focus to the banking sector then. Kotak Mahindra Bank, the stock is sitting with a cut of nearly 0.4% as we speak. Nilesh, tell us, from 2,141, where do you see the stock headed?
See, Kotak Mahindra Bank, if you look at this particular stock, we have seen a good base formation in the zone of 2030 to 2050, and after taking support around those levels, we have seen back-to-back for the third consecutive session, the stock witnessed a good momentum. Although today we are witnessing some bit of underperformance in the banking space, and Kotak Mahindra is also witnessing a bit of a selling pressure on the back of profit taking. So overall, it is important now for this particular counter to break 2170 levels on the upside. That's the kind of a double top pattern can be seen on the chart. So a break about 2170 will provide further momentum towards 2250 to 2300. As of now, it is trading in no trading zone. I would wait for a breakout about 2170 before buying this particular counter. The stop loss for the long should be placed at 2100. If somebody is already bought into this particular counter, then keep a stop loss at 2100.
All right, that's Kotak Mahindra Bank on the chart. But speaking of keeping with the financial pack, then speaking of the outlook for NBFCs post the RBI MFI mandate, Raman Agarwal, is the CEO of FIDC, says that he is expecting an improvement in asset quality and a drop in the cost of borrowing. Listen in.
We do see a drop in the borrowing cost. All in all, I think the larger issues at the macroeconomic effect are addressed. But however, let me add a rider here that one challenge which we've been voicing again and again is there, which RBI also says, is the need for NBFCs to have diversified sources of funding and not merely depend on banks heavily for funding. So I think there our demand for having a dedicated refinance window, especially for a very large number of small mid-sized NBFCs, is something still pending, although we believe that the same is under active consideration. So I think that's one point. Apart from that, I think we do see major concerns being addressed at this. As we move ahead with the rate cuts coming in and with positive environment being created, I think I see certainly one way for asset quality, and that is improvement.
That's the view coming in on the outlook for NBFC stocks. But shifting focus to Ashok Leyland then, Kanishka, tell us what is the news flow here?
That's right. Ashok Leyland is in focus because the company has completed 1.01% stake purchase in Switch Mobility UK from Dana Limited. Now, following this, Ashok Leyland has increased its direct holding in SML UK from 98.5% to 99.5% now. Now, consequently, Opter UK along with Hinduja Automotive UK has now they now hold 100% in MSL UK. Now, following the stake purchase, Ashok Leyland stock is down about 0.5% in trade today.
All right, shifting focus to an SME IPO, 18 Papers and Foam, which is all set to debut on D Street. Should investors subscribe to it? Are there any red flags which investors should be watching out for? Well, we caught up with Sharan Lalane, who's the independent SEBI research analyst on this recommendation on the IPO. Let's go across and listen in.
So I would suggest investors, especially in the IPO, SME space, please understand the risk. It is a very high risk, high return kind of investment. you can go years without seeing any kind of upside and years of underperformance. So please be very careful on that front. I would give a avoid rating for this IPO. And even if you see with the peers such as JK Papers, West Coast Papers, they have a turnover of 5,300 to 3,500 crores. They are trading at 10 to 12 times. So you will never see any kind of a high PE for this company. Also, it will trade around 8 to 10 PE in the coming future. And that too, it is very high risk because anyone can come and get up and start this business. So over a long period, no sustainable competitive advantage, no more. It is a clear avoid.
Welcome back. You're still tuned into Market Fatafat. This is a show where we discuss all the stocks that are buzzing in trade today. And first up, let's put the spotlight on BSE. The stock, in fact, is taking a knock in today's trading session. The stock is down nearly 4.5% today. And after the recent surge in the stock, today it is cracked significantly. But what is leading to the fall? Sharad is now joining us with all the details.
In focus is BSE, as the stock has received a significant fall, and this is because the stock has been added in the ASM framework, which is the additional surveillance measure. Now this is coming in because of the recent surge seen in pricing and the trading volumes. We check the Bloomberg numbers, the 1 year volatility, the stock volatility is almost 47% as compared to 30% of its peers. Now what is happening in ASM framework is it's enhanced scrutiny and trading restrictions would be there on the stock, and a higher margin requirements would be coming in when it comes to the trade, and limits will also be coming in for the intraday positions. Now the current P is also very high, coming at 89 times, and we did check the numbers. The volumes have not increased, but the stock price in comparison to the volumes has been increasing, especially over the last 2 to 3 odd months. Now how BSE has moved in last 3 months, it's up 110%, more than doubled. In last 6 months also it's up 59 odd percent. Now what has led to this growth? There are certain key factors for BSE's rally. There is strong institutional buying coming in, rally overall in the capital market theme also, which we had picked up last month itself, and a strong Q4 operational numbers. Three triggers of course for BSE includes an eventual listing of NSE and NSDL, especially impacting the entire capital markets theme, and also their market share in the F&O segment. Will it increase or will it stabilize? Interestingly, technical indicators is also something we watched out for. On yesterday's trading session, the RSI was 81 times. That is almost, you could say, it is on a significantly overbought positions. Interestingly, the BSE is still trading above all the key moving averages as well. But of course, a correction coming in after being placed in the ASM framework.
All right, moving on from BSE, that's cracking in trade on the back of being added to the ASM framework. Another counter that is in focus today is Wipro, that is declining in trade with cuts of 1.6% right now. The company has announced an extension of its partnership with Metro AG, an international food wholesaler, for an additional 2 years. Now, under the renewed agreement, the company will continue to provide Metro with integrated digital services across cloud data, application development and AI-enabled IT support services. Now, Wipro was doing well in trade, but Wipro is in focus today on the back of that news flow. If you can pull up the chart for today, Wipro is trading with gains of 1.8% on the back of that renewed or the additional, the additional years that it has added to the contract. On the back of that, Wipro is in focus.
Okay, so Wipro in focus on the back of that, but Polycab, this one is also on Nilesh's radar this afternoon. Tell us, what is the news piece over here, Nilesh?
See, Polycab, in fact, apart from that, if you look at this segment of wires and cables, we have seen a good momentum. KEI, Polycab, both the stocks are doing well. We have seen a good formation of a high top and high bottom formation as well. As far as Polycab is concerned, it is on the verge of a breakout. The major neckline of this particular counter is placed somewhere around 6,250. So if it breaks above 6,250, then the next target would be somewhere around 6,600. Looking at the overall recent development and the setup, we are expecting that this counter to break above 6,250 going forward and move towards 6,400 to 6,600 territory. So can be added and accumulated on declines, keeping a stop loss below 5,950. Position target comes somewhere around 6,600.
Polycab is a buy. We could see levels of 6,500, 6,600. That's the word coming in. But shifting focus to IREDA, then the company is in focus, or rather the stock is in focus on the back of their fundraising plans, which the company had announced a few days ago via QIP. And the company has now informed the exchanges that they've raised about 2,000 crores at a floor price, issue price of 165.14 rupees per share. This is at a discount of about 5% to its floor price. And allottees include LIC. In fact, about 50% of the total fundraise comes in from LICs, which means 1,000 crore, that's the quantum of amount invested by LIC, followed by Society Generale, Morgan Stanley Asia Singapore, and Vikasa India EIF1 fund. So these are some of the allottees in the QIP. The company has raised a total of 2,000 crores, and the stock is in focus on the back of that.
All right, moving on from IREDA on the back of that news flow to Indigo, that's in focus today on the back of a brokerage note that's come in. Rabinder, take us through what does the brokerage note say?
Well, yes, Interglobe Aviation is in focus. Kotak Security has come out with a note on Interglobe Aviation, and they have maintained their buy rating with target price of rupees 6,700. They say that they see initial sign of India facing a prolonged demand-supply mismatch, and the domestic metro to metro numbers declining year-on-year basis for the third consecutive month in April, despite healthy overall market growth, and the country is continuing to add and scale up new routes and airports. And the Indigo's key peers are capturing every suitable aircraft available on lease globally, as its and weight-lift aircraft support from supply designated to China. So back of this note, stock is up more than approx 0.5%.
All right, moving on then to the next counter. Nilesh, you've picked out EID Parry for us. Tell us, what do you see on the charts for this counter?
See, across all sugar space, we have seen once again the momentum has come back, and today we are witnessing a good spurt in the stocks like Renuka, Dwarkesh, EID Parry, and also Balrampur Chini as well. So out of all these, this particular counter, EID Parry has a better structure. It is moving in a rising channel kind of a formation, and also given a good breakout from a smaller time frame chart frame. And looking at the overall setup, we are expecting this counter to move towards a new record high from here, which is somewhere around 1050. So that's the target that we are expecting in EID Parry. One can keep a stop loss below 955, can be added at current level, and a short term momentum can be seen towards 1020 to 1050.
Okay, so that's the view coming in, 1022, 1050. That's the target for EID Parry on the technicals. But shifting focus to the tech sector, then HCL Tech. Kanishka, there's some news flow over here as well.
That's right. HCL Tech is in focus on the back of two key developments that signal strategic growth and global expansion for the company. Now, HCL Tech has expanded its partnership with US-based Standard Insurance Company to drive AI-led transformation and deliver digital-first services at scale. Now, this deal win strengthens HCL Tech's foothold in the US market as well. Now, back home, HCL Tech has inaugurated its second delivery center in Kerala. The facility will focus on AI, Gen AI, and cloud technologies, highlighting the company's commitment to building capabilities in next-gen tech. So on the back of these developments, the HCL Tech stock has been trading nearly 3% higher today.
All right, with that, it's time to wind down on this edition of Market Fatafat. All of you, thank you so much for joining us. Kanishka, Rabinder, and Nilesh, thank you so much for taking the time out and joining us. With that, Ashish and I will also take your leave. Thank you so much for tuning in.